What's up, traders? This is Jay from swimtrading.com. Last week, we saw that the market closed bullishly because of the trade war phase 1 deal between China and US. So is this going to set up for further bull run that is going to come, or is it setting it up for more bearish action to come? Well, in this week's analysis, I'm going to share with you the key levels that you need to know in order to tell us just that. So here we are looking at the SP 500 weekly chart. So on this weekly chart, right, you can see that nothing has really changed because the upside still remains 3,000 to 3,020 and the bottom remains 2,860 over here, which coincides with the yearly pivot R1. So you can see that the market has been range bounded since mid-July. And you can see that from July onwards, it is trapped here, and then it does a downside, upside, and then now a lot of indecision in the last 4 weeks. So in this cluster of indecision, well, this may be distribution, this may be further accumulation. How can we know that? Well, I will want to see for further validation. So if the bull run is going to continue, okay, so if the bull run is going to continue, I would want to see this level, which is 2860, holding, successfully. So if any bull run is to continue from here, the traditional November rally, I would want to see this level over here holding it properly, and there must be demand, there must be buyers coming in there. If not, the prices will not be supported, okay? So on a daily chart, well, this is what we see. We can see that last week, even though on Friday it is very bullish, it does a gap up, but what you can see there is also a pin bar, also known as a shooting star. So there's two scenarios. The other scenario right here, well, the textbook we are reading it is that there's a lot of rejection in the 3,000 to 2,970 to 3,000 area. There's a lot of rejection, a lot of sellers, okay? So this is where the selling zone is. However, okay, so another way of reading it is, if let's say tomorrow it opens slightly lower and then fail to hold lower and, trap or enter all the shorts, trigger all the shorts order first, and then after that it comes back up, then I am looking at a long towards first, okay, firstly, which is my key level over here, which is about 3010 thereabouts, and the eventual target for the coming week, should the bullishness hold, remains at 3030. So these are the two overhead levels that I'm looking at. So on the downside, right, I would like to see that this gap hold out first. So this gap between 2960 and 2940 better hold, and if this level doesn't hold, then I'm expecting further downside to come, and probably the market will come down and test the low of 2880 or 2870 area, which is the previous resistance over here, or the support over there, okay? So this is pretty optimistic, pretty looking good for a long, and with any pin bar, well, the retail traders will be looking at shorting it. However, I do think that when something is so obvious, usually it just gets trapped, okay? So this is what I have here on the on the S&P 500. Then you can see the Dow Jones Transportation is the same thing, trapped under the monthly pivot. The New York Stock Exchange composite, okay, so this is the NYSE composite. It is the same thing. You have a pin bar over here, and then this pin bar is showing that there's further downside, further rejection of the 13,000 level. So whether is it going to hold, I'm still looking at this zone over here, which is ranging from 12,750 to 12,900. So this zone is the immediate resistance that is in the coming week. And if this level doesn't hold, then let's forget about any upside, okay? There will be further downside if this level doesn't hold. Now, heading over to your Europe side, right, you can see that while last week the US have been going down first and then closing up bullishly. On the DAX, you can see that it is the total opposite. So instead of going down, if you count 5, well, look at last week's candle, it is a solid bullish candle that manages to push it at a close just a little higher than the rest of the weeks, and it is heading for the R1 resistance of the yearly resistance, which is at 12,700. So this remains my upside target for this week. I'm expecting market to get a little bit of stagnation, consolidation around the 12,700 level on the DAX. Okay, and going into daily, we can see that this is a solid gap up. There is no rejection. It closed all the way up and it looks nicely bullish, and is going to go for my key level, which is at 12,600, as well as the R1 area, which coincides with the 12,700 level, which I analyzed previously. So this remains the upside for the week. If any downside is to come, I'm looking at over here. Okay, so I'm looking at this zone of 12,200 plus minus as a support level immediately, because if this level is not able to hold, it means that the prices would have gone below the monthly pivot. It also means that there is some form of weakness in the price moving forward. Okay, so the bias is definitely bullish. I'm looking for it to retake or retest the 12,600, 12,700 level, and this is what we are looking at in Europe. So now, coming back to Asia, you can see that Hang Seng first. So Hang Seng, if you look at weekly, it is just around there, and Hang Seng has been respecting this trend line pretty nicely. So I'll be paying attention to my current trend line, looking for a bounce up over here to this zone, 27,000. And will this happen in the next week, in this coming week? Well, it's anybody's guess. It may happen, it may not happen. But looking at the daily candle, we should be able to see some more details. And immediate upside remains here, 26,500 level, the zone around there. That's the immediate level. And eventual target 27,000 is also coinciding with the monthly R1 level. So maybe a thrust up and then moving up like this in the coming week. If not, then we are looking at a closure of this gap. And when this gap closes, then I'm looking at a downside of 25,500 to 25,250. So this one remains the support, and here remains the first resistance and the eventual resistance. Okay, so this is what I have for Hang Seng. And now over here, back to Singapore, you can see that the Singapore market is pretty much the same. It is right there at the bottom. Is it very low? Well, not exactly low. And if you look at it, this seems to be setting up a very nice bearish continuation pattern to come. Let me zoom out and look at a bigger picture. You can see that it has been on a downtrend, have not been able to break up, and this week's level remains at 3060. So this one remains at a support. Okay, so 3060 as the support, and the upside is 3160 for the STI. Okay, so this is what I have for you across the indices of the global markets. Now over to gold, you can see that gold, it is still very nicely in a downwards channel, and in this channel it's pretty high volume, and if the global equity market looks to rebound, then gold should come down and retest the 1475 area. I'm looking for the 1475 area to hold, and if it doesn't hold, then the next area down would be somewhere like 1440, okay, which is the S1 on the monthly pivot. So further downside for gold, this is what I'm looking at least on the charts, and I think that this will be compensated by a rally in the US market or by the global equity market. All right, so that's on gold. And lastly, looking at commodities, we have oil bouncing off this very nice level, 51.50 area. So last week you can see that I already mentioned I was looking at the bounce of this area, and I did mention of selling puts. So this is what I did last week. I sold the puts at around this area. So you can see that towards Thursday, Friday, the market just ticked up higher, which puts my put position, the put option position, in a very healthy position. Upside for this coming week, should the bullishness continue, I will want to see this zone holding first, which is 54.50. Once it holds, I'm going to look at a further upside of 57, no more higher than 57.50 in this coming week. Okay, so pretty spot on for oil so far, and I think oil is going to be range bound. They are going to find that the, especially coming into November, the Aramco's or Saudi's production capacity is going to resume. Okay, so I don't think there's going to cause any shortage, and there should be no pressure to the upside unless any tension arises out of the Middle East region. Okay, so this is what I'm looking out for in the coming week. And yeah, I hope you have a safe trading week. And if you have any questions, feel free to reach out to me through my website, through my Facebook, and I look forward to see you again next week.